Okay, welcome to today's online class. What we're going to cover today is year one. It is a taxation paper and it is from the summer or May 2017. What I want to do is the add back question, or the question, to give it its proper name, will require me to calculate a tax adjusted case 1 or case 2 profits for a particular year. I am going to make another video in relation to that, what I'm going in terms of going through the case 1, case 2, case 3, my various schedules, but for the moment we can just accept that schedule D, case 1, is going to be income from a trade, for example using your hands, a butcher or a plumber, and case 2 is going to be a profession, let's say a doctor, an architect, a solicitor, an accountant. So what we need to do, the objective of this course, or the objective of this class, is to adjust my profits to get tax adjusted profits. What profits am I adjusting? I am adjusting the profits that the accountant has prepared. So you're going to be given an income statement or profit and loss account, and that will show me my net profit or loss of, let's say, 40 grand. What I need to do is I need to adjust that figure, because revenue are not going to allow a deduction for all of the items included in here. For example, they never allow a deduction for depreciation. I'm looking for it. I don't actually see the word depreciation included here, but it's going to be somewhere in the question. Likewise, I'm not going to tax my dividends under case 1, that's schedule F. My rent received is not case 1, it's case 5, and my interest earned, again, not case 1 or case 2, it's actually case 3 or 4 in some circumstances. So that's what the objective of this question is. It has been on the paper, and every paper probably for the last 20 years, so it more than likely will come up. You're given a little P&L, you're given some notes about the figures included in the profit and loss account, and we need to decide which of the costs are allowable and which are not allowable. So when I say allowable, it means, are they wholly and exclusively incurred for the purpose of the business? There's a lot of case law in reality. There's legislation, section 81 of the Taxes Consolidation Act 1997 does specify what costs are, specifies some of the costs which are not allowed. So it's above, that content is the reasoning behind it in terms of case law and the legislative basis is above and beyond the course or the extent of this syllabus, but I'm just making you simply aware of it. So what we need to do is we need to adjust my 40,000 profit to come up with a case 1 profit. My starting point for this is always, again, a pro forma net profit per accounts, whatever that is, or loss. It's a profit in this case. What I'm going to do is I'm going to take away other income, so my rent received, my dividend received, my interest received. They're not case 1, so we need to exclude them in the calculation of our case 1. And we will then add back my expenses that we are going to disallow. When I include all them figures, I'm going to get my schedule D, case 1, tax adjusted profits, and that's the question complete. That's going to be for 20 marks. So again, it's about breaking these questions down into their parts, is having an approach in terms of how you deal with them. Always start off with your net profit or loss per accounts, take away your other income, and add back your disallowed expenses. We will then work through the question on a line by line basis, and we will include the figures. So let's read question 3. Mark Brown has been in business for a number of years and is an electrical contractor. He prepares his accounts for the year ending December, and these are reproduced below. So I've got income, I've got sales of 500 grand, Okay, I've got my cost of sales and my gross profit. That's nothing unusual. I have my other income that I'm adding on to the gross profit. So I've got my dividends, my rent, and my interest. All of these items need to be deducted in calculating case 1, which are my dividends of 500, my rent of 475, and my interest of 120. So if I just go ahead and include them, I get a total amount to be taken away is 1095. I will then start working through my expenses. The first thing I'm going to do is I'm going to look and see is there any expenses which does not have a note beside it. For example, office light and heat is 3,000, and I'm going to assume that there's no issue with that. I've got no reason to suggest that expense should be added back, and therefore I'm not going to add it back. So I'll just work down in chronological order or in sequential order. So my first item is going to be employees cost. It's going to be 56 grand. I see the makeup of it in note 1, 56,000. What we need to do is then we need to go through each item on a line by line basis and ascertain should it be added back or should it not. Drawings by Mark. Your drawings by a business owner for a sole trader is never allowed as a tax deduction. They will always be added back. For example, if I make a profit of 100 million, I can't just have drawings of 100 million to lead with a tax of, the taxable profits of nothing. So drawings of 6,580 are always going to be added back. Number 2, amounts paid to Mark's girlfriend. Just because it's Mark's girlfriend, I don't necessarily have a major issue with that, but I want to know, does she actually work in the business? So Mark's girlfriend often visits Mark in his place of work. She offers her opinion and on his advertising, but does not work for the business. So therefore there's no reason why it's not a business expense. If Mark is paying his girlfriend 2,500 to offer her opinion but not actually doing any work, I don't regard that as an allowable business expense. So I would write girlfriend, and I am going to add back the 2,500. You might mark, like the wording here, I would write the wording in the question. So Mark's girlfriend. Item number 3, staff wages. I don't see an issue with that. It's a business expense. It's an incurred wholly and exclusively for the purpose of the business. I assume so. Christmas bonus to staff. Again, paying your staff a bonus, whether it be through salary or paying your staff anything, is really a business expense. I might be taxed through benefit in kind, or so my employees might be taxed through BIK or benefit in kind, but the actual payment to them is no problem. If I could pay them their gym membership, I could pay their barbell if I wanted to. It is fully an allowable business expense, but it might be taxed in a different way in terms of the personal tax as opposed to the owner's tax. Christmas parties, the clients, never allowed. Any form of client entertainment is always added back. So client enter is going to be added back, and it was 6,584. I will include just a reference to the staff party, the staff Christmas party, staff Christmas, and I'm going to put in the amount 0. I'm informing the examiner that yes, I have thought about it, and I am telling you that it is allowable by me not adding anything back. If I was to simply exclude it, the examiner is unsure of if I just forgot about it or if I didn't know what to do with it. Here I'm being very, very clear. I'm telling the examiner I am not adding it back. So I would do that for all of them. So write down all of the items, and it's either going to be a yes or a no. My last point here is permanent health insurance for Mark, 3,800. Anytime I see anything for Mark, I add it back. A barbell for Mark, a professional subscription for Mark, any personal costs for Mark is going to be added back. Permanent health insurance is it's an insurance that Mark might take out, that if he lost his job, or if he, like an income protection policy, he would continue, the insurance company would continue to pay him, even though he's not necessarily working. But we don't need to know that. I'm just explaining it. It's PHI, it's personal expenses, not a business expense. Add it back. My little point here before I move on to note 2 is on completion of the P35. P35s are now gone, but it was a form used by an employer to remit payroll taxes on behalf of his employees. We now have PAY modernisation. So on completion of the P35 for 16, Mark has to make an additional payment of 1,200 in respect of the tax due on the Christmas bonus. This amount has not been included in the accounts. So he's incurred a business expense, something to do with bonuses and for Christmas party. He forgot to include it, so I'm going to put it in now. So P35, and instead of adding it back, I am actually going to take a deduction for it, because it is a business expense. He was entitled to a deduction which he didn't take, so I'm going to take it now. It's reducing that €1,200 is reducing the add backs. It's reducing the bad things which are going to increase my net profit. Moving on to note number 2, I'm looking at administration expenses. It's 3,500. Just to show you where it's coming from, it's admin, 3,500. Item 1, telephone is €800. Okay. Mobile phones are 17. Trade magazines are 540, and I got something about stationery. Let's just focus on the phones. So Mark provided a mobile phone to an employee. The total cost of the calls for this phone is 600, and this includes the cost of private calls made by the employee, which cost €100. I would imagine people or students in the exam are going to add back the private call element of €100, but that's not going to be the case. That would be incorrect. It is okay for an employer to take a deduction for costs in relation to the employee. They're incidental. It's not major. I wouldn't necessarily have an issue with that. So employee costs. I'm not going to employee phone, employee mobile. I'm just going to say it's nothing. I don't have an issue. Not going to add it back. If it was Mark's personal calls, absolutely 100% add it back. But because it's his staff's call, because it's incurred by a staff member, that's okay. The balance of the mobile call charges refers to Mark's mobile, and he estimated 25% are going to be private. Okay, so I will need to do a slight little working here. I'm pretending I'm in the exam, so I'm gonna pop down here. Actually, I'm not going to open up another page. My workings and my mobile calls, they were 1,700 in the question. 600 of this refers to his employee, so I take away 600. My balance is 1,100, so that's where they were the cost for his employee, and I think 25% are private. So the balance of 1,100, 25% of these are going to be private costs, which amounts to €275. Add back Mark's calls. That was the balance. It's just a matter of showing your workings. You could have done it on a calculator, but I just want to make sure that any little workings or adjustments that we do, we are showing the examiner as we go along. Landline calls are all business, so I have no problem with the landline of 800. So I'm just going to inform the examiner that there is no add back. My trade magazines, I have nothing to suggest that they are not allowed. Mark is an electrician. If there were a subscription to a hairdressing or a beauty salon, well, I'd kind of question why would an electrician need a subscription to a beauty magazine. But I don't have anything to suggest that either of any of them costs are not allowed. So and therefore I'm going to allow it. Trade mags, 0. Stationery is €460. The cost of the stationery includes €80 in respect of the purchase and postage of invitations to his girlfriend's 30th birthday party. No, not allowed. Obviously not a business expense. So stationery, I'll just write B-day, birthday party. Just to let the examiner know, it's going to be, I'm adding back €80 of that amount. Note number 3. I've got two different bad debts here. So a bad debt written off, that's no problem. It's a business expense. I have a bad debt recovered. That's no problem. It's income that I'm getting from, or it's a negative expense. So a debt that I previously wrote off as bad is suddenly paying me. So I've got no problem with them too. What I do have an issue with is the general bad debt provision. So the difference between a general and a specific is that a specific provision is created for a specific person or a specific transaction. For example, John owes me €14 because of a sale on the 1st of March. I sold him a chair, and he lives in number 4 down the road. It's very specific. We have all the details. It's an actual event, an actual person, an actual invoice, an actual date, an actual amount. So I will never disallow any specific provisions. There's no problem with them. What I do have a problem with is my general bad debt provision. That's creating an estimate of what I think people might not pay me in the future. And it's usually a percentage. Let's say 5% of people won't pay me. Well, that's very general. It's not specific. General bad debt provisions are always added back, provided that it was an increase. It would be a deduction if it was a decrease. But in this case, it's an increase. So I've got my movement in my provision. So increase in general provision, €300. And I've no problem with my specific, I've no problem with my bad debts recovered, I have no problem with bad debts written off. I will include them as a line in the solution in a moment. My next area is repairs. So the purchase of a new telephone system, well, that's not a repair because it's called capital expenditure. Buying a new asset is capital expenditure. So a new telephone system is always, or any new equipment that you buy, any capital expenditure is never allowed. A repair, we're bringing an asset restoring an asset to its original condition. I have no problem with that. That's normal repairs and maintenance. But buying a new telephone system or enhancing the value with, let's say, an even better model is going to be capital expenditure. And all capital expenditure is disallowed. So purchase of new telephone system, I'm going to add it back of $1,500. Constructing a new bathroom in the office, again, capital expenditure. I know it's probably for business, but it's capital expenditure. Repairs to the office window, I have no issue with that. It's restoring it to its original condition. So for example, if it was a double glazed window, and if I'm restoring it to a double glazed window, that's no problem. However, if I decided to put in a triple glazed window, well, I would have an issue with that, because that wouldn't be a repair, because that would be an enhancement, in enhancing the value. But it's not. It's going to be repairs. It's fully allowed. And finally, my provision for a replacement of a window in the office. Provisions are usually not allowed. And certainly in this question, it's more than likely, it's not going to be allowed. So I have a provision. I can't have a provision in my accounts. Think about it. If I say I'm going to have a provision to go out for dinner tonight, and I'm going to put a provision of 400,000 in for a meal for two, that's not going to be allowed. So a provision is only an estimate, so it is not allowed. So the provision will be added back. So what I'm adding back is the purchase of the new telephone, the construction of a new bathroom, and the provision. All added back. My repairs, I have no issue with. I see a note: the new bathroom was built to provide a second bathroom for staff members. Okay, I noted that it was for business purposes, but it's capital expenditure. It is going to be added back. So there's my telephone system, capital new bathroom, capital repairs are fine, and provision added back. Next note 5, note 5. So in this I have got fines and penalties and late charges and I've got some depreciation. Number 1, fines, penalties, interest on late payment are always added back. Revenue do not give you a tax deduction for breaking the law or for being bold. Depreciation is always added back. So my parking fines, I'm going to add it back. You cannot get a deduction for breaking your parking rules. So your parking fines were 150. They are added back. Your mileage paid to employees while working away in accordance with the civil service rates. There are rates. There's various tax briefings. SP1 IT 00 number 2 of 2007, I think. They are IT 54 if you're interested. They are guidelines saying that if we pay employees mileage rates per kilometre in accordance with the civil service rates, that there's no issue. So my mileage, I have no issue with it because it's in accordance with the civil service rates. Van expenses, I have a note. The van was provided to Mark's employees and is used for business purposes. I have no problem with that. And van depreciation is always added back. Any form of depreciation, even if the asset is used for the purpose of the business, is always going to be added back. We will see in a later lecture that the depreciation is added back, but you claim wear and tear allowances or capital allowances at a rate of 12.5% instead. But that's for a different point of view when you're looking at our income tax computation. So I'm going to add back my van depreciation of 2240. 2240. And that's note done. That's note 5 done. I've got advertising. My gifts to customers at Christmas. You cannot get a deduction for providing gifts to your customers at any time of the year. Unfortunately, not even at Christmas time. So gifts to customers are going to be added back. So customer gifts, and they're going to be 1,300. Newspaper advertising, I don't know if I have an issue with that. I don't know what I'm advertising, but we'll have a little look at that in a second. I don't see any issue with it for the moment. The Christmas gifts were given to customers, the top 10 customers, and it ranged from 200 to 600. Wonderful. Don't care. Even if it was a cent, a gift to your client is never ever allowed. It's specifically disallowed in legislation under Section 81. The cost of the hotel accommodation and meals in respect of a trip to Nice amounted to 300 and included in the figure of 600 above. So a trip to Nice I've no problem with. What they're trying to confuse you with here is VAT. In terms of the recoverability of it. But if it's a business expense, it was in relation to a trade show, it wasn't a personal holiday, I have no issue. Okay. Advertising in local paper regarding the sale of a bike, it's not a business expense. He's unless it's the sale of a electric but he's not involved in buying and selling bikes. Therefore, it's not a business expense. So advert, bike is disallowed. Okay, moving on to note 7. Legal fees. Planning application for extension to the business premises. It's not your day-to-day revenue expenditure. You do not get planning every day of the week. So I'm going to add it back. It's capital expenditure. €400 for planning, it's enhancement. Solicitors fees for pursuing your receivables, the people who owe you money, I have no problem with that. It's a cost of being in business. Unfortunately, at times, people will not pay you. Unfair dismissals case taken by an employee, no problem. It's a cost of being in business. And contracts for employees are 300. Again, I don't have an issue with any of that other than the planning. Let's give me a little bit of background. Bob Devine was let go in January 15 after he repeatedly failed up for clients' premises in order for him to complete jobs. He claims he was never told about the jobs, so he was stayed at home for 9 months. The €120 relates to a payment of a solicitor in relation to the unfair dismissal. I don't really care. I don't care why he's being dismissed. The employee is taking a case against him, so the employer has to defend himself. If they incur legal costs, that is a business expense, fully allowed. Interest. Bank overdraft interest, no problem with that. Interest charged by suppliers, that's not necessarily a fine. It is interest in relation to a business activity. This prompt payment legislation came in about 8-9 years ago. I don't have an issue with that interest charged by your supplier. I do have an issue taking deduction for the interest charged by revenue and the late payment of payroll taxes, PAYE, PRSI and USC. You're not allowed a deduction. Revenue do not give you a deduction for being bold. So therefore the 150 is going to be added back. Note number 9, home insurance and business insurance. I'm going to assume that the home insurance is not allowed. I might want to know, does he work from home 10% of the time, and therefore I might allow him 10%, but I've got no such information. So I'm going to allow the business insurance of €1,000 and disallow in full the 700 home. So my home insurance is added back, my business insurance is fully allowed. So I have put in all my expenses. I have taken away my income, which has got nothing to do with case 1, so I'm just going to get my answer. So I will add up all the sum of my add backs. So it was all the way up here. So if I just draw up the sum, and I get add backs amounting to 35,000. So what I'm going to do is I'm just going to, for the purpose of just this video for a second, I'm just going to hide some of these the zeros. Whether you do them on the face of the computation or whether you do it as a separate working, I don't really mind, but I just want to show you the layout. Like, I'm just hiding all the items that I did not add back. So just hiding the ones that I didn't add back. I'm going to ignore business insurance down there. So I've got add backs of 35,000. So I forgot to put in my net profit per accounts. So let me see. Net profits are 44,620. 44,620. And I will net profit per accounts. I'm going to take away my other income. I'm going to add back my disallowed expenses. I have got case 1 Schedule D profits of 78,000, and that is for 20 marks of your question. All we asked to do was to keep looking and asking ourselves, is the cost incurred wholly and exclusively incurred for the purpose of the business? So actually, one thing I don't think I done, I'll look into the solution in one moment, but his add back for his calls, I just don't see the 275 being added back, so I'm just going to pop it in. Telephone, I don't think I included it. I included a telephone system, but I don't think I included this working, the 25% of the personal calls. So that's given me a slightly different number. I've got Schedule D case 1 profits of 79,234. So let me pop into the solution to show you where the marks are coming from. This was question 3, I believe. that is the. I think I can scroll down to the bottom. So there we go. So okay, so the first thing I'm looking at is my answer. It's 79,234, 79,234. Immediately, as an examiner, you're getting 20 marks, near enough. I'll have a quick look just to say, just to see does anything look funny, but you got 20 out of 20. You're on the way, well on the way to passing this exam. So third solution, the profit per accounts. They're listing less my other income, which is up here. I just listed out, and then they're putting in my add backs. One thing I've noted at this solution, I note that you're getting marks left, right and centre all the way down here, but they are not necessarily giving you marks. It's not clear that they're giving you marks for not including things. They're only this solution is giving you marks for only the things that you're to add back. I still would like you as a student to show me the items that you're not adding back, because I think that's still an important point. Even when you're going through your through practices in future questions, it's good to show that you're not adding things back. Some exams ask you to actually make a note on it, to actually write a comment on it, but it doesn't ask you in this paper or in this course. Okay, so that's the question. Again, my name is Aidan from taxaccountinggrinds.ie. Any queries or comments or concerns, please feel free to get in touch. It really does help my channel if you would like this video and consider subscribing. If there are any queries or you want to ask me any questions, please feel free to comment on the section on this video below, and I'll come back to you in due course. I will be doing a number of different videos across the range for both tax, financial accounting, management accounting, for both year 1 and year 2. If you have any suggestions of any questions that you would like done or topics covered, please feel free again to leave a comment, and I will be able to pick that up there and I will be able to see it. Bye for now.